We wanted to ask you essentially where you are seeing China, I guess, transform Southeast Asia. I know you had a panel on that earlier today. So is this China's growth really transforming what you are seeing across the region?
Definitely. China, with all the infrastructure projects, the fast trains, and then layering on top of that Alibaba's digital infrastructure, they are showing Asia and the world what could be done if physical infrastructure backs up the digital infrastructure. And Alibaba could do what? 25 billion US in a single day on Singles Day. Yeah. Who can do that in the world?
So where are you seeing, I guess, the most opportunity amongst your 5 businesses?
I think Southeast Asia and Asia must learn to build infrastructure like the Chinese does, and build it well and build it inexpensively, price of parity, build it at the cost that the people could afford to use those facilities. If they can get that right, and then layer on top of that the digital infrastructure that's now pervasive in Asia, that will be formidable for Asia's future growth.
Of course, you're based in Malaysia, and we have seen Malaysia's Prime Minister Mahathir push back quite sternly against a lot of unfair deals, including some Chinese state companies. So do you see this deterring investors from China, which does really make up the bulk of foreign direct investment?
No, I don't think that he's deterring foreign investment. Mahathir is known as a very simple, Malaysia's open for business, very pro-business, has always been. And what he's saying is that we want much more transparent deals that are subjected to the global standards. And I think that's fair.
So it's fair in terms of a lot of their policies as well, and tightening, reining in debt. You think that's a good move?
I don't understand the politics behind it, but whatever Mahathir is saying right now is pretty fair, that we want to subject it to all international scrutiny standards, and Malaysia open for business, which is a good call.
And no impact to investment that you're seeing so far?
Well, I think investments, because of the Chinese-US trade war, that necessarily made people rethink about investments. There's a kind of slowdown in the velocity of money. But Malaysia and Vietnam countries like that tend to gain a bit more when there's such a little trade war between US and China. You can see China in Guangdong is already introducing a lot of incentives to make people not go away from China as a result of the trade war. So because people will flow to Malaysia and Vietnam and to hedge themselves, yeah.
Speaking of flowing, we did have, of course, the deferral of the signing between the Highspeed rail network between Kuala Lumpur and Singapore. Do you expect to make another bid for that in due course?
Definitely, because I think, again, on the pretext that it will call an international tender and price it correctly. I think when all the dust has settled down, and postponing to 2020 is a good decision. So for both governments to rethink and readjust the cost and everything, and when they get their act together, I'm quite sure they will see the issue as it is, and I'm quite sure both will be positive. I'm quite sure the private sector can play a much bigger role than presently envisaged. Probably they could even come up with their own financing. So that will be pretty good by 2020.
By 2020, I was going to say, do you have a time frame?
Yeah.
2020, okay.
Yeah, they'll make a decision on that, yes.
We've heard that you're bidding for a stake in the Swiss multinational Lagrauge Holcim, their Indonesian unit, around $2 billion. Can you confirm that?
I cannot confirm. I cannot deny, neither do I confirm. No comment.
No comment, okay. We want to also ask you, I guess, where you are seeing other investment opportunities or perhaps M&A opportunities amongst the region.
Yeah, because of this trade war, there's now a little bit reluctance of many big players to reinvest in the Asian or emerging nations territory, or even in Europe. So this gives us opportunities. We've got about 12 billion US worth of M&A capabilities right now. So yeah, I'm beginning to see better opportunities presented. And in fact, in the last couple of months, I've closed 1 or 2, and I've got quite a lot on the table, which I've not seen before, which is good.
There's a lot of thought leaders here at the Milken Summit. What are you mainly focusing on when you sort of talk behind closed doors?
Well, actually, I always advocate the TCRF, Transparent Coherent Regulatory Framework, for infrastructure and all important utility projects to be bid by the world and financed by the world, rather than being restricted to their own whatever, skewed towards their own political alignment. If infrastructure projects can be done like what the British does. I mean, the British allows people like Malaysians to own their water assets, or the French to own their power companies. Why can't the world learn from that? And the regulatory framework is very transparent, it's very coherent. They don't change their mind every 5 years. And because investments of such nature, utilities and infrastructure are so long-term, you cannot have a flip-flop in a government and political change of mind every 5 years. So that's why it was this well understood by the leaders of today, and I think they will understand that they have to build this fiscal infrastructure so that the digital infrastructure can take advantage of it. And then the world will be a better place, certainly.
Finally, we mentioned that you manage assets about $16.3 billion. Do you have a forecast to get to a next level by, say, 2020, 2025?
Now, we like to grow. We want to grow steadily, but we are very long-term players. We look for a long-term infrastructure project by nature, long-term. Even the hotel projects, if you buy a hotel, it's very long-term. But we have got a formidable management team that can manage long-term assets. What I love is the quarterly dividends that I give to my shareholders, and I myself am a very big shareholder, my family. So I love the dividend long-term. I don't like to subject our company to the tyranny of quarterization. I don't quite like that. So I love to choose businesses that are very long-term in nature, but very profitable.